to talk to you for a few weeks now. All right, so welcome everybody. I am Knifey Burks. I'm your Tampa Bay area realtor. I am coming on tonight with one of my new favorite people, Miss Tomeka. I connected with Tomeka a couple of weeks ago. She is a mortgage expert, and when I say the word expert, she is an expert. She dropped so many gems during our conversation that I wanted to bring her on and share her with you to share with the world. So tonight we're going to talk about entrepreneurship and homeownership pulled together because a lot of times we can't do it. So Tamika, let everybody know a little bit about yourself.
Well, first, thank you so much for having me
You're welcome.
on. I really appreciate it. I hope that during this live and during our discussion that I can empower someone, teach someone, educate someone on, what is needed to be successful in the financial realm as well as
Yes.
the real estate world. So my name is Tomeka Lynch Purcell. For those that do not know me, I am a best-selling author. Also, I own a mortgage company. I work with
Yay.
individuals. Thank you. I work with individuals. Mainly, my niche, if you want to say, is minority building, minority wealth. Um, I help individuals prepare themselves to become homeowners,
Mhm.
teaching them how to get there and also how to maintain once they're there. It's not
Mhm.
as hard as we would like to think it is. It's more so just discipline and just wanting a change. So I hope
Yeah.
that during our conversation, again, that I empower someone and teach someone or say something that someone has not been privy to, or
Right.
provide pure clarification on something that they may have been confused about.
Yeah, I'm sure you will because during our conversation, honestly, I have been a licensed realtor for 21 years, and there's a few gems that you dropped that I didn't even think about. Like
Oh,
seriously, because I've always worked with either first-time home buyers or investors, and it's always with first-time home buyers. In most cases, they're working a regular 9 to 5.
mhm.
And so with the entrepreneurs, there's a few extra pieces to it, and we're
Mhm.
going to jump into that tonight because there are some things that they should do and some things that they should not do that we should
Absolutely,
not do as entrepreneurs. So
absolutely,
we
absolutely.
need to clear that up. So let's start with the piece of the puzzle of what's needed. Start with the basics of what you think the entrepreneur should start with when they're thinking about buying. Because if you're thinking about buying and you just go to a lender, you may not be ready. So, what do you
Exactly.
think they should start with?
So one of the things that I've seen in being in the mortgage world for over 25 years is that entrepreneurs are, and in our discussion, we talked about it before, we have to say it's going to be one or the other, right?
Yeah,
And what I say
yeah.
about that is we always hear that we should start a business, Schedule C, or like let's just be a sole proprietor. So we'll focus on sole proprietors. Sole
Hmm.
proprietors are, and the difference in a sole proprietor as well as an S corp or a C corp, or and well, that's basically it, because a sole proprietor and an LLC, those tax returns are all going to be applied to your personal return. Okay.
Hmm.
So
Hmm.
when they send in, you might hear somebody say, or a lender will say, hey, we need that buyer's business tax returns. LLC, Schedule C, they're not going to have business tax returns. It's all
Hmm.
going to be on a 1040, which is a regular tax return, personal return.
Yeah.
So what I've
Hmm.
seen in the industry when I'm looking at buyers is that a lot of people are starting businesses and are afraid to uh, show their worth or show their wealth on their tax return.
Yeah. Yes.
One of the things that we talked about that I keep having to explain to,
Hmm.
and although I am not exclusive to minorities,
Mhm.
You know, in our industry, we can help whomever, needs the assistance.
Right.
But
Right.
I have found that it's more so minorities that
Mhm.
are so far behind
Mhm.
in the knowledge. Our knowledge gap is just years and years and years
Yeah.
behind from the regular. So
Mhm.
that's why I say my niche is to speak more so to minorities.
Mhm.
And as we discussed, I said we have to learn that it is definitely okay to have a positive net worth. It is
Yeah.
okay to have a net worth. And for those that do not understand what I mean by net worth, I mean liabilities over assets. It
Mhm.
is okay to have assets and over your liabilities.
Mhm.
So what I'm seeing is that a lot of my entrepreneurs are unable to qualify for mortgages because they immediately go in and write off everything that they can think of because that's what they've
Yeah.
been told to do.
Yeah.
And
Yeah.
what I've learned in
I'm guilty.
I
I'm
was gonna
guilty.
say, listen, I was guilty too. Um,
Yeah.
I was guilty too. And again, this is another thing that I find myself saying a lot of is that we have to change our mindset. You change your mindset,
Mhm.
you change your life. And
Right.
I honestly can say that because that is exactly what happened with me.
Mhm.
Changing my mindset changed my life. It took me from homelessness to a multimillionaire.
Wow.
And you have to
Oh my gosh.
so what ends up happening, like I said, you go in and you write off everything, you put in all these deductions because at the end of the day, what we have learned, our generation has learned, is that we can only get money one time when tax season comes. We want to get that earned income. We want to be able to get a refund on
Mhm.
our tax returns, right?
Yeah.
We don't
Yeah.
want to owe the IRS. We all have, for whatever reason, become afraid, intimidated by
Mhm.
the IRS.
Mhm.
And what happens with that is we fall into that same um, hole, black hole of
Year after year.
exactly
Mhm.
never being able to have anything because when you go out and try to buy something and they ask you for your tax returns as an entrepreneur, their bottom line is going to show a negative number and you're
Right.
never
Mhm.
able to get anything.
Mhm.
So this
Mhm.
is how we end up in this cycle. We end up in a cycle of, I really want to do this. I really want to have a house, and then becoming disappointed because we can't do it. So
Mhm.
I said all of that to say we have to be okay with having a positive net worth. When it is time to file your taxes, show the world what your business has accomplished. If you have made, you get all of your bookkeeping together and all of your receipts together and it shows you made over $150,000 in income, that's exactly what you should claim. You claim
Mhm.
what you made.
Mhm.
Yes, you're going to end up on the IRS, but here's the thing about the IRS. The IRS is like an installment debt. They're going to ask you to set up a payment plan, and all they want to do is get their money. They're not going to
Mhm.
come out when they're like, "Oh my God, they're going to put a tax lien," and they only do that to individuals who keep trying to run. You
Mhm.
ignore the fact that you owe them. They know that you owe them, and
Mhm.
not paying. Set up a
Right.
payment plan. The payment plan doesn't stop you from buying the house. We, as a lender, as a bank, I'm going to say, just show me that you set up that the IRS accepted a payment arrangement with you, and show me that you've made 3 consecutive months of payments on the payment plan, and
Mhm.
we'll include that payment into your ratios. Done. You're closing. So
Mhm.
don't set yourself up by
Right.
putting all these deductions down because you don't want to owe the IRS, and then you're not thinking about the future. One thing that I always say as well is that we have to be proactive and not
Mhm.
reactive. And we
Mhm.
are reactive 9 times out of 10. When
Yeah.
people try to
Yeah.
purchase a home and they say,
Yeah.
well, you can't qualify because you don't show any income, then we're reactive and we're trying to figure out what to do. So we have
Yeah.
to be proactive when it comes to that. So all of my
Mhm.
entrepreneurs that are listening here tonight, we are about to be into a new year. 2022 is going to be the year of change. You're going to
Yeah.
have to file your taxes. I need you guys to step away from being afraid. Do not let fear continue to cripple you.
Mhm.
Make sure that you have a positive net worth. Net worth should be what's on
Mhm.
your mind. And you're going to show that you have a positive net worth in 2022.
Mhm. Right. And I love that because the thing is a lot of entrepreneurs already own homes. Most of them own homes. But the thing is I hear a lot of entrepreneurs saying that I want to invest. But still with that low net worth or negative net worth, you're still not
Negative.
going to be able to invest.
Nope, you
So
cannot.
it's one or the other one with that too. So
And that
yeah.
goes to show too, when it is preparation again with the we have to be proactive instead of reactive.
Yeah.
I noticed that, when COVID came in and it hit the economy, it just ripped our economy apart for a while, especially
Mhm.
for small businesses. A lot
Mhm.
of minorities, a lot of individuals that look like you and I
Mhm.
claimed that the PPP loan was a fraudulent thing. Anybody that applied for PPP loans, it's fraud. They're trying to get over. And I had to say a couple times to individuals like, don't put your fear on other businesses who are,
Yeah.
because
Yeah.
the PPP loan was set up for those who have an actual business, can show actual
Yeah.
revenue, have filed tax returns to show revenue. And the government was like, listen, we just took a huge um, negative impact with this pandemic or the disease that came on, and we want to save small businesses. So
Mhm.
those small businesses that actually truly had been chugging along, paying their dues, was able to apply and be approved.
Mhm.
And I tell people it's preparation. You have to be prepared.
Yeah.
It's
Yeah.
easy for us to go in and apply for and start a business and get an EIN number, but we
Mhm.
build that business. And why would we go through all of that, promote ourselves, brand ourselves as these serial entrepreneurs, but then we don't
Right.
claim the income when it's time to claim the income?
Yep. Yep.
I challenge every entrepreneur that's on this call or who hears this message to be ready to show a positive net worth. And that means, doesn't mean that you don't have to not write things off, but don't write things off so much that you don't qualify to be able
Mhm.
to get anything else. And that is auto loans, installment loans, home loans. We
Mhm.
It's time for us to have real estate. It's time for us to be able to invest, and we have to be proactive and start preparing our and grounding, building businesses on positive foundations in order to
Yeah.
make this happen. So
Mhm.
the one thing that I've been seeing that is hindering a lot of entrepreneurs in home purchase is the fact
Mhm.
that they are writing off every dollar so that they don't have to
Every pen, every piece of paper.
everything, everything. But then they say, well, I made 150,000. And I'm like, yes, you did. But my bottom number shows that you're only qualifying or saying that you made $1,500.
20,000.
So I gotta divide $1,500 into 12. That's not gonna be enough to pay your mortgage. So
Mhm.
yes, guys, we have to start showing some positive. We have to
Mhm.
start you know just we can't stay in fear. We got to start making some change.
Right, because all of the you're deducting we're deducting all of this. You're basically deducting from your life that you
You
can be
are
living.
exactly.
Yeah.
Exactly.
Yeah. So
And then I always tell people,
definitely.
listen, we want to live our best life all year long. Why do we
Mm.
wait to live our best life at the end of the year
Tax
when it's time to
time.
file taxes? Exactly. The taxes only last for 2 months. We have to be able
Right.
to live our best life for 12 months. So
Right.
yes, if owning real estate is your goal, you're gonna have to show a positive network. You're gonna have to show that
Mhm.
you made some money as an entrepreneur. And
Mhm.
if filing their taxes or how you should do it is a problem, they can definitely reach out. I have
Uh-huh.
several individuals that can help you get your taxes in order, help you with your payments and all of that to the IRS. So you
Mhm.
can't say that you didn't know, because I'm telling you right.
Right. Right here, right now.
Right.
But there is another thing that you mentioned during our call. there was a difference between, you kind of went over it a little bit earlier. There is a benefit to being an S corp
It is.
as opposed to just coming in with an LLC. Can you share with them about
Yes,
that?
absolutely. So with an S corp and an LLC, so one of the things that you'll learn is that even being a Schedule C, because if you remember in the beginning, I was saying that a Schedule C and an LLC all falls under personal returns.
Hmm.
So you're going to be taxed on your personal returns for
Hmm.
any businesses that you start, which is going to be that LLC or the sole proprietor, which is called a Schedule C. As
Hmm.
an S corp or a C corp, those are business returns. Those
Hmm.
generate more income. So and it generates the ability to obtain a different tax on how you file your taxes.
Yeah. Yeah.
So the income that you are making in the S corps are beneficial because it's taxed totally different than if you are filing an LLC or a Schedule C. A
Hmm.
lot can go into the breakdown of that. I would definitely love if you find the time where we can have another discussion about the S corps, the LLCs, the tax benefits, and everything that go with that.
Hmm.
And how you want to file your taxes. If you are a Schedule C, if you're a sole proprietor, please continue to be a sole proprietor. Only move over to a corporation when you are ready to move over. But I'm
Hmm.
hoping that you'll have me back on and we can do some
Yeah.
definite talks strictly about the major benefits to having a corporation versus the benefits of being a LLC and a sole proprietor. One thing that I will give you guys is that if your business goes under as a Schedule C and an LLC, you're going to be solely liable for that. Now, the
Hmm.
limited liability means that only a portion, or whatever it is, the way you have your taxes filed, and what kind of loans and debts that you have under that business can come after you personally. As an
Hmm.
S corp and a C corp, the debts or anything that you have falls mainly on the corporation. So that's
Yeah.
something that you want to think about when you
Yeah.
are filing or creating your businesses. There's a
Hmm.
there's corporations have stocks that can be invested, that you can have, that you can sell out to off to boards. So there's a lot that can go with being an S corp or C
As
corp
opposed.
as
Uh,
opposed to being a Schedule C
LLC.
LLC.
Yeah. Yeah, I definitely do want to bring you back on because I also want to discuss the difference of the types of loans that they can get,
Oh, absolutely.
and specifically what's needed. So I think we should definitely come back on and talk about that, and then
Oh, I know, that'd
also
be great.
get a little bit more into that. But for now, anybody that's watching, and if you're watching the replay, we do want to know what's stopping you from buying a home so that we can know specifically how we can help you, and specifically what questions to add, that what questions that you have. So you can either comment below or either message myself or Tomeka on Facebook. Or
Mhm.
Tamika, if you want to give them your information or how to reach out to you.
If you want to send me a message on Facebook, I think I'm Tomeka Purcell
Hmm.
on Facebook, just normal Facebook. If
Hmm.
you decide that you are interested in purchasing a home and you want to know more information, you can definitely reach out to either of us. My
Hmm.
contact information is 704-401-5288.
Hmm. Hmm.
Definitely just give me a call and we can
Okay.
discuss options, because what I
Yeah.
also offer with my mortgage company is the ability to help you um, repair your credit to qualify for a home. So, like I've set this up.
Oh, I didn't know that.
Yeah,
I didn't even know that.
journey,
So that's good.
my journey in doing this. So, if you heard me in the beginning, I said I've been doing this for about 25 years,
Yeah.
and
Yeah.
um, one of the things. So I had to change my mindset, just as I am asking you guys to do. And that was
Hmm.
because when I said I was homeless, it was absolutely sleeping in my grandam with my kids for
Wow.
a good amount of time based on
Mhm.
my financial choices and
Mhm.
or the lack thereof, because
Yeah.
you
Yeah.
can be in a bad situation by not making a choice. um,
Mhm.
so after dealing with all of that, I lost a lot. I owned a home, but I kept filing bankruptcy trying to save it, and it went into foreclosure. I had rental properties; those went into foreclosure. Like, my credit
Wow.
was
Okay.
a complete mess, and I was I was trying to do what we've been told to do, which is, well, if you wait 7 years, all that stuff will fall off, right? And I
But
was
you're losing your life.
And I said, I can't wait
Yeah.
7 years. I got 3 kids that want to eat. Like, I got kids.
Yeah.
I don't think they can wait 7 years. So,
Right.
and just dating myself, I would go into the library. At the time, we Dewey Decimal System. I'm pulling out the little drawer, finding my
Oh
cards.
my God. I used to hate that.
They're
I
probably like,
hated
what is
that.
she talking about? But yes. So I taught myself how to understand credit, and I
Yeah.
had to, because I needed to figure out how was I going to get back. Because let's think about it. It's been way too many individuals that don't look like me, or white families, white individuals who have had downturns, bad situations, bankruptcies, and they've been able to come out of it positive and start all over again. It's like, how do you, as we talk about Donald Trump, how have you been able to file so many business bankruptcies, but you've been able to bounce right back? Like,
Right.
no problem. So I had to learn the system and learn how to um, make it work for me. So, of course, I was my own first client. And once I was able to repair my credit and get those things off, I started helping my family, and then it got to be so much that, my mom was like, you probably need to start doing this, because you're it's taking
You're
forever, and
good.
all these people. And so at one point I started doing repair.
Mhm.
And then I was in the industry already, in the real estate industry, and I kept seeing minorities come through my desk, because my background is mortgage underwriting for 20 something years. And
Mhm.
I kept seeing minorities credit reports coming through, um, where, and just to be honest, banks consider your credit as your character.
Yeah.
So if
Mhm.
your credit was bad, they're going to, in their minds, they're like, oh, they're not going to be a good fit. We don't want to help them. And
Mhm.
it bothered me, because I'm like, I used to be that person that couldn't get anything no matter what I was trying. Afraid to can't get approved for a house because, just credit's bad. Can't even get rental. Um, I was that person, and I just said, if I ever get an opportunity to be able to offer lending programs to
Yeah.
minorities, I'm going to do it. Little did
Mhm.
I know that God was saying, "Oh yeah, that is what you're going to do. Just keep going down this path. I got you."
Yeah.
I started the business, and that's my goal. That is
Mhm.
my goal, to educate minorities on what it's going to take, help them repair their credit, help put them in a situation so that they don't have to worry about finances again. And I always have to tell people that credit is so much more powerful than dollars, because a lot of us want money. When I see these posts on Facebook where there was like, will you take a 800 credit score or $1 million? Everybody negates the 800 credit score and takes
Mhm.
the $1 million. And they're like, well, if I got $1 million, I can get what I want. But yeah, that $1 million doesn't last long.
It's not. Yeah.
It doesn't last
Right.
long, and you're back
Right.
to, you had $1 million and you still got a 500 credit score. If you
Mhm.
get an 800 credit score, your score can leverage you getting a
Yeah.
$1 million. So you end
Yeah.
up with both. So
Mhm.
it's past time and time out for us being told no on a daily basis about living our lives. Real
Mhm.
estate is the one thing that we want to get involved in, because it will never go away.
Mhm.
It's gonna all real estate is gonna always be here, and it gives us the ability to have residual earnings while we sleep. Because when you buy a
Yes.
home and you put a renter in, they're going to be paying the way,
Thank you.
for you in everything that you do. So, it is my job to teach everybody and educate everybody that I can. I do know that I won't help everyone, but I'm going to do my
The
best
best that you can. Right.
to do that.
Right, and that's why we're showing up tonight because a lot of people don't know what we do.
Exactly.
And it's just like you just mentioned that you do credit repair. I didn't even know that, so that's good to know. It's definitely good to know because a lot of people need to start there.
Mhm.
So it's good to know that. So reach out to Tameka for your mortgage expertise and credit repair. Honestly, she is very inspiring. That's why I wanted to speak with you because I've connected with so many people that have the information and they're like robots. It's like no inspiration. There's nothing behind it. They just want to sell, sell, sell.
Right, right.
But Tamika is inspiring. Tamika is a person that I've only known for a few weeks, but I feel
Yeah,
like we've known each other forever.
forever.
So,
I know.
so I am so glad that we connected on Facebook, of course. I'm
Me
glad
too.
that we connected. So we're going to come back. We're definitely going to come back and let you all know soon. So be sure to drop the questions that you have or either reach out to myself or Tamika so that we can, when we go live again, we'll make sure that we're jumping more or jumping deeper into the questions that you have because we want to see you guys successful. We want to see all of us successful, whether it's just purchasing a home or if it's buying your first investment property or your 10th, whatever it is. It's
Yeah.
time to level up.
Mm.
So,
Oh,
yeah,
yes, indeed, indeed,
yeah. So,
indeed.
thank you, Tamika. Do you have any last words for um, the
I
audience?
do just this. Nothing can change if you're doing nothing.
Yeah,
So, we have to get up and do something.
yeah,
And if you don't know what the something is, that is
hmm,
why we're on this call. Um,
yep,
we are here to help you, at least guide you to the first step, because
hmm,
that's what you have to do. You have to take the first step. So,
yeah,
um, like I said, nothing changes if you do nothing. So
right,
it's
yeah,
time. It's time. It is most
okay,
definitely time. And home ownership is possible in any
yeah,
situation. Um, with my mortgage company, not we I try to provide you guys everything that you need to be able to purchase a home. We even offer our program is called Credit to Close, where that is we work on helping you prepare your credit. We also look at your income statements and let you know immediately what you can qualify for. And the
hmm,
reason we do that is so that you'll know exactly what you're working towards. Um,
yeah,
because let's be honest, when you know that you're wanting to buy a house, you want to know, well, what price do I look at? What am I looking for? And
yeah.
you can spend the time Googling all day, what
It's
property,
not going to be you.
right? You can look. Um, and then we just once we look at the income, we also look at your asset statements. And the reason we look at your asset statements is because we go through, like I said, my credit to close program is a very disciplined program. So we look at your assets and we look at 2 months, and then we tell you where we're seeing excessive spending that you can save.
So I need to stop going out to eat like all the time, right?
Right. See, and this is the thing that I always tell people because everybody's so afraid of budgeting, right? Of saving money. We want to spend our money the way we want to. Absolutely, you do. But all I'm going
Mhm.
to tell you is, hey, I saw that you went to Chick-fil-A 5 times this month. I need you to go to Chick-fil-A once. And the
Or
four other times that you went, I need you to take that money and put it to the side. So
or
you're not
knife stay out of home goods, right?
okay. Too. If you're going to Home Goods too many times, I'm going to say, listen, go to Home Goods once, or how about don't go to Home Goods at all? and the amount of money that you spent at Home Goods, if you spent $300 at Home Goods, I need you to take that same $300 and put it in a savings account, which is going to be your house fund.
Mhm.
So what we're doing is we're taking the spending that we're seeing, and we're not telling you not to spend it. I'm telling you to take the money that you thought you wanted to spend and put it in the savings. So anytime you're like, oh, I want to go to McDonald's, take the $10 or however much you normally spend and put it in your savings account. And then go in your kitchen and do like we used to have to do, as my husband calls it, get you some loaf bread and put your hamburger on it and make you a
Look, I
and make
told
you
my daughter, I told my daughter the other day, she said, "What's for dinner, Ma?" I said, "We're having a smorgasbord. Whatever is in that freezer, you pull it out, defrost it,
that's what we
because we're
eat.
not going out to eat today."
Absolutely, absolutely. So, and that's the thing. And the credit to close program is only 90 days. So, if you can make it through 90 days of saving and just dedication, then in that fourth month or fifth month, you become a homeowner because once we get you pre-approved, so once the credit scores go up, I immediately send you an application to get you approved for the mortgage. Once I
Mhm.
get you to pre-approval, I assign you to a real estate agent. If you have one, we just forward you back to that agent. Like, hey,
Yeah,
they're ready to go, and this is what
yeah.
they qualify for. Here's the pre-approval, and you get started. And then, well, so the cost for the credit repair, there is a cost in the beginning. The cost for one person is $500. For married couples is $750. And
Mhm.
the difference in this is that once you close on your home with us, we turn right back around and give you that money back because it's
Wow.
just an investment in yourself. We don't typically make a lot of money on the credit repair. That's not why we're doing it. We're doing it because we want to get you prepared to purchase a home.
Yeah,
So
yeah.
we have no reason to keep the money, but the reason why we make you invest in yourself is because we spend a lot of time working on improving your credit. So if we're going to invest our time and and energy in making sure that we can get your scores up, then you would need to invest in us doing that. So we do ask for that initial investment, but once you go to closing, we write a
Mhm.
check and give that back to you.
Wow, so we definitely need to put together something for that, like a flyer or something to
Oh,
share, because I
absolutely.
definitely want to put that out there because there's so many people getting denied.
Mhm.
And then they just walk away and think I can't buy,
Exactly.
and years go by and they're still
And
sitting
the
in the
same
same
situation.
situation. So yeah,
Exactly. Exactly.
yeah,
Exactly.
waiting for that 7 years to come for things
Yeah,
to fall
yeah,
off.
that's that
So
thing, 7 years, and when I hear people saying it, I'll be like, "We're not gonna do that." That's not what
uh-uh,
because
no,
it's
no.
not gonna help you. You wanna do it now. You
Um,
wanna buy now.
Well, we can be on here talking forever, but we're going to break this up and we're going to come back on and talk a little bit more. So we'll share, post on Facebook to share with you guys what we're going to talk about coming up. And thank you so much, Tameka, for taking the time tonight to jump on with me. So,
Absolutely, absolutely. I
yeah.
look forward in us talking again.
Okay. Alrighty. Talk to you soon.
Alrighty, bye-bye.
Bye bye.